But all in all, I think all those things combined with some really, really troublesome period now of a debt spiral at a time when Americans are ill afford the ability to stay afloat. We're just seeing more and more people fall below lines versus rise above them. And eventually, that weight of those people that are not doing well will pull those ivory towers down. You can only stay in that ivory tower long enough. And eventually, when too many people have gone in the opposite direction, they themselves will look to pull the people out from the ivory tower. So we probably have a few weeks to a couple of months. But after that, I think we're going to really have tough sledding for quite some time to come after that.
On this episode of the What the Finance podcast, I have the pleasure of welcoming back Peter Grandich. So Peter is the founder of Peter Grandich Company. So thanks so much for coming back on the podcast today.
Glad to be here. Thank you.
No problem. Look forward to speaking again. And I wanted to start where I start with everyone. So what is your current thoughts on what we're seeing, I guess, in the economy and in markets overall at the moment?
Well, it all depends on what your outlook is. If your outlook is for the next few days to weeks, I think things will pretty well be on either side of what they're at in the general stock market. I think there's still some excess optimism and complacency that will probably get a little bit of a push uh, because I think the economy is going to get soft enough that they could start believing what they've been saying for 2 years about lower interest rates and a cut by the Fed. I probably think if it happens, it's going to happen in September. I believe there'll be a political motive behind that. They'll never say that, but I don't think Powell wants to work for Trump, to tell you the truth. But nevertheless, if you're a short-term earner, that's one thing. But I think longer term, uh, I believe we're just on the cusp of the worst period socially, politically, and economically. And there are a lot of reasons. I have five, from debt spiral to retirement and aging crisis and immigration evasion. Probably the least about talked about on Wall Street, and the most that'll come back to bite them is their little regard for what's happening with the BRIC nations. I think it's far bigger and going to be as impacting world trade the same way the Industrial Revolution did. And then finally, and it's only going to get heightened as each day goes by, we're really seeing how political paralysis exists in the United States now. Not only do the two parties not really want anything to do with each other, but each party has a faction within it that's breaking away from the middle of that party. And so all those things are not promising for anything past the next few weeks and months. If you still invest, as I used to do many years ago, for the amount of years in front of us, I think it's going to be a very, very tough sled.
Okay, makes sense. So you think that, say, coming up to the election, probably until November, things will be okay, and then after that is potentially when things will fall off, or is it sort of could be beforehand as well?
I think it's beforehand. I just thinking as we speak here in May, uh, we get into these summer doldrums kind of attitudes. Listen, there's always a few things unexpected that can happen, and most likely now. And I guess the difference now in the market than the past several years, up until about a year ago, most people, even if they were old timers like me, weren't really thinking much about how geopolitics can impact the markets. Now it's clear and evident they can. And there's a lot of moving pieces that can impact that. What's happening in the Middle East, what's happening in Ukraine, what's happening in China and China itself, what may be happening there and what that may lead to. But all in all, I think all those things combined with some really, really troublesome period now of a debt spiral at a time when Americans are ill afford the ability to stay afloat. We're just seeing more and more people fall below lines versus rise above them. And eventually, that weight of those people that are not doing well will pull those ivory towers down. You can only stay in that ivory tower long enough. And eventually, when too many people have gone in the opposite direction, they themselves will look to pull the people out from the ivory tower. So we probably have a few weeks to a couple of months. But after that, I think we're going to really have tough sledding for quite some time to come after that.
Okay, and so you're thinking that will that be the total debt collapse, or do you think that will sort of start a little bit slower and then maybe take quite a while to get to that extreme level? How do you see this sort of playing out?
Well, what concerns me most, Anthony, is the complacency, particularly among the professional community. But I'm not surprised at that because of the age of the average financial advisor now. With no disrespect to your youth, but there's still a lot of people who have really only been weaned on a one-way street. They don't know what it's like for a market to go sideways or, God forbid, down and maybe not come back. And once we get into that, because I believe we're going through a blow off top here now, the last of the crazy things. And listen, this bubble began with Greenspan. He began the pump, and quantitative easing was really accelerated by Bernanke. And now Powell is kind of stuck and painted in the corner with his Fed. There's really no way out for them. But the average advisor just thinks that that's always will be to the rescue. No matter what, no matter how bad things get, all the Fed has to do is cut interest rates and add money into the system, and the stock market will go back up. I don't think that'll be the case this time. And I think they are in for, unfortunately, their clientele as well are in for a rude surprise.
Okay, so lots of people, I guess, say this run has been going since maybe end of 2021 or even maybe COVID or 2008, but you think it potentially this asset bubble goes back further, close to 30 years.
This run really began when Greenspan, after the '87 crash, instead of doing the necessary things of letting debt get unfortunately reneged on and washed out, we just began to increase our spending and not have a budget. Let's not forget, and this is really perplexing if you take the time to think about it. Congress has not balanced the budget since Bill Clinton. I mean, I don't know of any business that obviously no business could stay in business the way the government has run. But now, on top of that, we now have deficits that are running multi-trillion dollars a year. It was easier to get away when, we were going a trillion or 2 trillion every couple of years. But just in the last 4 years, we've seen as much of an increase in the debt as it took for the first 220 something years combined. And this acceleration is not stopping. Again, we don't have anything close to a balanced budget. We have these things that they create where they just can keep spending and keep so-called keep the lights on. And then they put every possible thing that congressmen on both sides, men and women and Republicans and Democrats, fill it up with pork. And the end result is we keep spending more than we take in. And even with a printing press, that gets to a point where that's not sustainable anymore. And the only good news out of that is it hasn't accelerated, but at least some industrial and Wall Street titans are speaking about it and bringing up that we're really getting to the point where we not pay interest. But I think any of that will be pushed off until after the election if somebody's going to really want to talk about it. And then we have a very peculiar election. We have an election that no matter who wins, about half the country is really going to be against the person, would have no interest wanting to work with them or hope they succeed, actually be rooting for them not to succeed, either one. And that's assuming that both current candidates are the candidate on election day. But so I just struggle with when we look past, say, this year and we look out for several years out. I think we're going to be involved in a period of time that most financial advisors have not been trained to appreciate. And then we have a public where 7 out of 10 families are living beyond their means. They live above their income. And eventually that comes back to pay a price. And we're starting to see that now because consumers have gone through all the excess savings that was created with with several $trillion more created out of thin air after COVID. And it'll all come home to roost. And unfortunately, everybody will look for those same group to say solve the problem again. And that's the group called politicians who have no ability at this point in time to really do any hard work together because they just can't be in the same literally in the same room anymore with each other.
Yeah, I think one of the proponents you were saying that came out against, I guess, Biden, what he's been doing with Stan Druckenmiller, a very famous investor. And I don't know if you saw the interview, he said that he would give Biden an F for Bidenomics. He doesn't agree with it. So, as you said, there are people coming up out against, it's more just the deficits while the economy is booming. It's, the same as
It was
what happened
interesting
during
that some
COVID.
of them are Wall Street titans. Now, Druckenmiller is not part of what I call the "Don't Worry, Be Happy" crowd. He's an independent thinker, and he won't just say anything if it sells. But guys like that, like Fink uh, and Jim Dimon, they have spoken because they recognize it. You don't have to be a rocket scientist. You just have to live this and breathe this to know we cannot continue at this rate and then still produce enough to even pay the interest, let alone no way we're ever going to be able to pay tens of trillions of dollars back. But unfortunately, where that burden will fall on are the people that are going to be more and more taxed. Because let's understand one thing: if we continue with this, and there's no sign that we're not, the only two weapons governments have is to raise taxes and cut services. And that burden will fall more and more on younger people who will not only have to be taxed more and not likely get some of the benefits that used to exist for older people, such as myself, but are also going to be at a point where they're going to say, hey, enough is enough. And we will have what I call the battle of the ages. That's still a few years down the road. But as the boomers peak now, we're going to be in the peak season, and then there'll be, unfortunately, less and less of us. Money will shift, and politicians go where the money is. That's just, at the end of the day, you have power because you have money, and politicians need that power in order to, do what they want to do. So we're going to see some dramatic shifts demographically. Certainly in the next, I give it 3 to 5 years. It may come earlier. It may come a little later. But a lot of us watching this are still going to be around for that, and most aren't prepared for it.
Yeah, it's a good point. And, if we go back to the economy, it's scary to think, well, what would it look, as you said, the average person is struggling, but what would it look like if the US wasn't running these deficits? Do you think things would just implode, or is it just that, what do you think?
Well, the argument will be, and historians will be, and I'm certain I'll be long gone by then, but somewhere's down 10, 20, 30 years from now, hopefully we're still a civilization here. And they'll look back, and the real key was 2008. That was the fail-safe famous movie when he could have still turned things around and walked it back. But we decided, instead of going through a very tough recession or depression, we just created more money to solve issues that were supposed to go to Main Street, but basically went to Wall Street, and a lot of it stayed there. And now it's beyond that, and I really would not bet a dime that they'll take the deflationary out to have to go through such a deep depression and all. It'll become highly inflationary, and they'll resort to the printing presses again, but it'll be through much more hyperinflation. That's why it's foolish in my book to talk about 2% interest rates and 2% inflation for anything past, if it's somehow fortunate, was to happen in the next few months or a year or so. But after that, the amount of money that will be needed to be printed just to sustain things will just be so inflationary at a time. And this is where I guess I differ from a lot of so-called Main Street, Wall Street advisors. They don't understand how the United States is losing not only its prestige in the world and its recognition, but its ability to influence things through monetary exercise, because the dollar continues to be used less and less as a world reserve currency. And I believe the BRICS, somewheres was as early as possibly this fall, but no later than 2 to 3 years from now, will introduce some sort of trading mechanism to counter any use of not having to use the dollar, and or eventually be something that may be used in place of the dollar or in competition with the dollar. And all those things are negative. This is what, Anthony, if I can just say this, what I just get so angry, even in the firm where I still have my insurance license, and there's young guys around there, and they're talking around the coffee place. And I bring this up to them. I say, "Oh, there's nothing to worry about the BRICS." They go, "Oh, look, it's only these countries," and they name them. I said, "Excuse me, all those countries once traded with the United States. Now they're not going to trade with the United States. Tell me how that's beneficial to the United States." And they go into the Jackie Gleason, and they can't answer it. And that's what's not being looked at in terms of the BRIC situation. Whatever they end up doing, even if it's not anywhere as big as I think it's going to be, that is still trade that used to take place with the United States and now be looked to be not be involved with the United States. So I don't see how that's a benefit for the United States.
Hey everyone, sorry for interrupting. I just wanted to extend a massive thank you to you for listening and tuning in and for your support over these 3 years. So we've had, hundreds of guests that we've welcomed on the podcast. We've had millions of views with hundreds of thousands of different people listening in. So I just wanted to thank you. You know, I started this as a student. I'm now currently working and I've always done this on the side just because I have a passion for it and I've enjoyed it. And probably similar to yourself, you listen to all these, different YouTube channels and podcasts of people listening to different guests. That's how I started, and I just wanted to sort of take the plunge and be able to have the opportunity to speak to these people, and you've made that happen. So thank you very much. Just myself, don't make any money from this, and it's really a passion project. So thanks for supporting that passion of mine. If you wanted to support the channel, all I ask is if you could like, subscribe, or even comment, positive or negative feedback. I'm always willing to take constructive criticism. I'd really appreciate that. But otherwise, thanks so much. If you can believe it, only 14% of our listeners actually subscribe to the podcast. So if you can, great. If not, no problem at all. Thanks for listening, and let's get back to the show. If I be one of those people, and maybe one of the people like in that insurance company, and push back on you, I guess what the United States and maybe the West has provided is it's consumption. It's someone to actually buy the goods that they're selling. So if the West and say the Western sphere isn't buying those goods, who would?
Well, see, that's on the basis that you still think that they're going to have the largest of the population, but the population growth is not there. In fact, when you start to look at even some of the members now that are members, they have substantial amount of population, and that population growth. One of the ways out for China, even though they could have if they stay on their course, they could enter a very severe deflationary cycle. But one of their ways out is, and they've been trying to do that, they only messed up because they kept COVID restrictions for far too long, is to move away from being an exporter and internal consumption, which they were doing. And one of the ways that can benefit is if they devalue their currency. And that's what I suspect this year is going to be done. And actually, that's I don't want to leapfrog, but that's a very bullish factor for gold, and another reasons why I'd stay bullish at all. But I would counter with you, and none of us are right. We're just talking about two sides of the coin, and we don't know where the coin will actually land. But I believe that these formations will be large enough that they in itself will have enough consumption, especially when you involve India and China, that the West, and by the way, when you say the West, look at Europe. Europe isn't the Europe of 30 or 40 years ago. In fact, it's one of the reasons that they themselves are having big immigration problems, because there's been so much migration there of people not from the West. And so when people talk about the West as if it existed 30 or 40 years ago, I don't think it's anything close to what it once was. And that's one of the reasons why I think you're even seeing some of the countries making overtures to China and all that might have never, ever thought of 20 or 30 years ago.
Yeah, okay, that's an interesting point. So let's say if someone got some sense and said, Peter, you're in control of the Fed, maybe the Treasury and the government as well, just to give you sort of total control. Is there any way for, I guess, this change to be prevented that you're suggesting in the US?
No, because there's too much debt to service, and we're not even talking about corporate debt. When 75% of all small cap companies who are very sensitive to interest rate, 75% of their debt has to be refinanced between now and 2029. And remember, a lot of them did it when interest rates were very, very low. So those that float at the 2 and 3% are not going to be able to do that. And so it's going to be more expensive. But personal debt and consumer debt, when you compile it all up, it's just, listen, we still live beyond our means. And I tell everybody, look, just basically every month we get a personal income and personal spending. And every month, personal spending is twice as much as income. And no one asked, well, wait a minute, if income was $3, but spending was $6, how'd you do it? We borrow. And even in the planning group I sit with, most families, from everyday workers to the athletes that I dealt with, 7 out of 10 families live a financial level at least one above their finances. And how do they do it? They do it 2 ways. They borrow, they build up debt, and they also don't put away for the things that they should, that they're going to need later down on the road, so they can live a better lifestyle now. And all those people and all the problems with retirement, and 65% of Americans working paycheck to paycheck, they're all going to do one thing, Anthony, for certain. They're all going to go to the government and say, you got to help me, at a time when that government itself is hard pressed to even pay its bills. And that's why I say, past this very short period of time and looking out years, it's going to be a very, very tough time. I call it about building a financial ark to be self-sustaining, that you can somehow get to a point where you're not indebted, where even if governments are not there to provide except the most essential services, that you're going to be able to, more than survive in that. And that's less is more. And people don't like hearing that, Anthony, especially in a world where they believe the more items they have and more stuff they have, the more happiness that comes with it, when in turn, a lot of problems down the road build up because of that.
Yeah, it's a great point, and I try and do that by taking lunch to work when I remember it. But I guess if we look at that, as you said, people living paycheck to paycheck, and probably one of the advantages is that employment has actually, remained quite buoyant and quite stable. So as you're saying, if there were to be a high spike of unemployment like we saw in 2008 or similar periods, that's potentially when, all these things would start collapsing, as people can't continue to pay off these bills.
I have 2 issues with the employment picture, Anthony. I'll just be brief with them. One is, a lot of it has been government increase in government workers, and government workers just work for a government that doesn't produce products and services and come self-sustaining. They rely more and more of taxes and income in order to pay that. And 2, people aren't recognizing that a lot of employment in this employment numbers are a lot of part-timers who are working 2 or more jobs. So let's just say I was working at Acme Factory and I got laid off, and I ended up getting a job at a grocery store and a gas station, 2 part-time jobs, so I can make close to or the same that I used to be. They'll count me now as 2 people employed, but I'm really one person employed at 2 different jobs in order to hopefully make what they used to make. So I don't believe the employment picture is as pretty as it is. And now we found out just today that over half the people that have come in as illegal immigrants, aliens, whatever the political right word call it now, are unemployed. And so, they're getting support somewhere. They're getting, things paid for and so forth. So it's not it's an illusion almost. It's literally a house of cards, and I don't root for it. I don't sell anything I don't sell dry food or coins or ammo or anything of that nature. I still part of a planning group is for my livelihood. But I can tell you that it's not built on a good foundation. And I think past, like we said at the beginning, past the next few weeks or few months, as we get into the next few years, I think they're going to be unbelievable, much tougher times, and not go away anytime soon after that.
Okay. So as you said, you think there's going to be, we mentioned this a few times, there's going to be a bit of a run up in the next few months. I'm assuming, the more speculative assets are going to perform during that period. But then say after that, is it just going to be those really speculative assets and the non-cash flow generating sort of companies that get demolished? Is it going to be an overall market? Are there any markets that you think will be safe during this period?
Sure. So the market right now is not only thinly led, but led by generals. And I just take it from a military standpoint. Anybody that was in the military would tell you that the foot soldier ends up winning the war more times than not. And so while there still may be some lasting effect from the Magnificent Seven or anything, unless the market can get great expansion and see far more companies participate in the rallies, it'll peter out. Now, whether it peter out tomorrow or in September or whatever, but if you're trading, that's useful. But if you're investing a few years from now, it's going to be even much more challenging for those type of companies. Adversity always creates opportunity. So there are areas that I'm certain will stand out. I, of course, have focused that in the commodities end and predominantly in the metals. Uh, it was hard for people to imagine, and I kept hearing, "But Peter, Dr. Copper, and how could they're all talking about a recession, and how could you like copper?" And I kept saying, "Well, that's because when that used to work, there was ample supply of copper." And so it could fall back because people knew that there was plenty going to be there. But that wasn't the case. And by the way, I think it's going to go to $5. And Peter's never been to $5. Well, today it hit $5. And we see that in other metals. We see that even in precious metals because of people's concern about the monetary system. And let's call it for what it is. Somebody, most likely China and some others, have bought such huge quantities of gold, physical gold, to drive it up because everywhere else people were sellers. People were selling jewelry, the exchange traded funds, people were lowering their exposure to gold. All of these things, dollar was rising. All of these things would have normally driven gold down. Instead, it's gone up. And the only reason that's happened is because there's been a big physical offtake. And I believe it's not for a trade, it's not speculation. It's because they're getting prepared, knowing there's going to be a dramatic change in the world's monetary systems. And I believe it's around the BRICS and things of that nature. And that market probably has, and like I said, my long-standing target from when gold was under 1,300 was 25.36. I think gold trades to that. After that, I'll take another look at it to see if things are getting to the point where some of these people that are talking about much higher numbers. But the needs for metals has been acute, and yet the companies that look for it and normally are the ones to find it have seen tremendously underperformance, poor performance. Just you shake your head and you can't understand why. I can make a lot of reasons for. But if you believe in this inevitable is continuing, they have to turn. Now, they might turn a lot later than any of us thought, but the opportunity right now presenting in my mind is people that explore, develop, and mine worldwide, but predominantly for me in North America because I want the safety and security of not political and social issues that can happen elsewhere. But that is one area. The other area is water. The need and the usage of water will become more and more pronounced. And then because we're living longer, still things related in the medical field will always be some interest in people with new products or new drugs or whatever. I don't specialize in that area, but I suspect that'll be an area that will still have, things, that do very, very well.
Okay, that makes sense. And yeah, I think for in terms of gold, it seems like people are saying lots of domestic buyers, the retail buyers in China are sort of going to the markets and buying gold. Do you think that's the case, or you actually think it's the governments who are
I think it's
driving
a
this?
combination. I think it's a combination. Listen, China is not out of the woods. China is on the fence right now. Uh, listen, I'm no government whiz or anything, but I think one of the things that would benefit them is to loosen and their real estate it was always propped up, it was always made out to be more than that and all. And they were doing the same problems we were. They were bailing out these state runs by giving them more money, and they treated it like funny money. But I think one of the key things for them will be is to devalue their currency, which will accelerate hopefully some internal spending in the country. And also, the one fear that I have because of how I think what I don't want to use the word pride, but how they believe Taiwan should be part of China. I think the Taiwan situation uh, could accelerate in their view, depending on if they have a certain view of who will be the next president. This is just my opinion. It's not politically generated. It's just being an observation that I make geopolitically. I think China would much rather see Biden another 4 years in regards to anything that regarding Taiwan than Trump. And right now, those look like the only possible two people who could be president come election day. And so that is a dark horse way out over there. But China and Russia have become closer. And, you say, well, they're enemies, but, the enemy of your enemy sometimes is your best friend. And the unknown factor in all of this, if you want to get real macro and start thinking out decades, how will India develop? Will India really grow? Is it the next China? Remember, China in the 60s was kind of like what we look at India now, and look what China managed to do. So who knows? But I can just tell you this: the United States is going in the opposite direction, socially, politically, and economically. It's not a place where I would want to bet a lot of money on past the next few weeks and months.
Big statement. Yep. So, Peter, thanks so much for coming on today. I really appreciate it. My last question is, what is one message you'd like people to take away from our conversation?
Well, with all that negative speaking, I would still hope them to have hope. I think that if we live a life of less is more, I think if we recognize that all the things that the world tells us that we need that makes us happy is not necessary, and debt is a terrible tool more times than not for those, whether or not they were spiritual or not. The most read book, whether you want to view it as spiritual or just some historical book, the Holy Bible, has not one positive verse about debt. In fact, it has most negative. And the biggest single problems for Americans are centered around our debt and how we treat money in general. So I think those are important things that we can work on as individuals, regardless of whether or not our government starts to do the right thing or not. We need to start doing the right thing for ourselves.
It's a great message. So, Peter, thanks again. If anyone wanted to find out what you do, where would the best places for that be?
Well, most won't, because most people don't like what I have to say. I know that, but I still feel that it's a need for me in this twilight of my career to share what I think is the case, not what I think people want to hear. But petergrandich.com is the website. I do most of my work on Twitter now. Most of my individual communicating is on Twitter. X, I can't call it X. I'll always call it Twitter. And I also have a YouTube channel.
Perfect. I'll put that in the description below, but thanks again for your time.
Thank you for having me again, Anthony. God bless.
Perfect. Hey, everyone. Thank you for listening. I really appreciate the support. If you've got value out of this, I'd really appreciate it if you could like, subscribe, or comment, good or bad feedback. I'm always open to that. But it really helps with the channel. As I said before, only about 14% of people actually subscribe to this channel. So if you were to that, it would really help. It could mean we could continue to grow. If not, thanks for watching, and see you on the next show. And you also might like this video right here. All right. Thanks again.